Hey, everybody, and welcome back to the Teaching Tax Flow podcast. Today, episode 175. We got a great topic for you. We're going to dive into some cool stuff here. I got something in my hand here. I'll show you the other side of it here in just a quick moment. We are going to dive and discuss some myths in the tax world. So, as I unveil this thing here really quick, it's turning. There we go. Defeating taxes. So, with a little secret project we've been working on, Chris Bacchiro, my co-host here, is actually going to walk us through this. And Chris, I thought it's something cool here that actually has never happened on a podcast. Two things. One, we have a book now. And two, it literally just hit me that this is the first episode out of 175 that I've actually done my hair and not worn a hat.
That is, I guess it's a special occasion. And yes, we are very excited about this book launch. It's called Defeating Taxes. And man, it's a long time coming, but I feel like this is really going to help people out. It's going to empower everybody how to legally and ethically reduce the tax they pay in their lifetime. If you actually look at this book or so the version online, you're going to see that there are 10 myths. We're going to walk through 5 of them today on the podcast. So you don't even have to read the book yet to get some of these myths, but we found that that there's way too many myths out there. We narrowed it down to our top 10. It makes up one of the many chapters of the book, but let's talk about 5 of them today. I'm excited to rock and roll. And yeah, myths that cost taxpayers thousands of dollars.
Let's do it, man. So I know there's just a couple, right? We're talking 5 of the 10 or however many we can get to here in 15 minutes or so. But these are great, right? Because that book introduces tax planning. We're always talking about tax planning, making things as easy as it can possibly be, where a lot of these myths get in the way, right? Like these are the things that small or large keep people back from making a huge impact. It's almost like why we chose Amazon to distribute the book on, right? Because it's easy. We don't have to recreate the wheel. Somebody gets on there, they order a book. That's not a sales pitch, by the way, but humble brag, whatever. It follows the same process. So let's jump into these things, man. I'm excited to go through these with you.
Well, the first one is I don't have control over my taxes. So that's a big myth. It's funny. I was honored to record a podcast yesterday for someone else in the teaching tax flow community, and we were talking about like what's the biggest misconception about taxes is that you don't have any control over it. You pick your tax by the actions you take. If you don't take any actions, meaning you're not doing any tax planning or tax strategy or forward looking at all when it comes to tax, the government's going to pick your tax. And that government could be the federal government, state, or local. So you absolutely have control over your tax. It just comes down to, are you doing any type of planning? If you're not, you have surrendered or given up that control to tax agencies, because the tax laws are written, remember, to encourage and discourage certain behavior. That behavior could be social, it could be economic, it could be environmental, and you have to understand how that works. And that is the number one myth, is that you just don't wait for a result. I mean, you can just wait for a result on your tax when your tax return is prepared, or if you self-prepare it, but that's not tax planning, and that relinquishes control to the government.
And that's saying too, like if somebody says, oh, well, I don't have control because I didn't do anything and now they have it. Well, you had control up to the point that you didn't do anything. So really, you are in full control the entire. I mean, you're in control even if you get a bill from them, whether you pay it or not. I mean, there is at no point that you're not in control of that.
You're in control.
It's like
of
driving on the road.
Absolutely. So the second myth is, if I earn more money, I'll lose everything to taxes. How many times have you heard this? I'm sure, I always in the inside chuckle when you're here listening. Well, I wouldn't have worked overtime, but it all goes to taxes. No, there's no 100% tax rate. Now, your marginal tax rate is your number one key performance indicator when it comes to tax planning and strategy. And I've been doing this for a long time. I've yet to see 100% tax rate. Now, there's some nasty tax rates out there, right? There's 50% in some situations, but not 100. You're not going to lose in all of your income to taxes. It's just, you hear it all, you hear it all the time.
See when people say
hey,
like,
I
"Oh,
don't want to.
I don't want a promotion. I don't wanna make more. Don't pay me more because my tax bracket's gonna go up."
Right, like, "Oh, I
Right.
don't wanna sell that stock because I'll pay it'll all go to taxes." It's not gonna all go to taxes. Now, should you harvest a capital gain or a capital loss? That comes down to tax planning. That comes down to the first myth of having control over when you pay tax on it and actually what tax you pay. Because remember, different income is taxed at different rates. So, there's no 100% tax rate. If you earn more money, it's not all gonna go to taxes, and actually, the more money you earn, the more um, tax planning and strategy plays a role in your life and should play a role in the bigger impact planning and strategy could be.
Mhm. Hey, Chris, I'm like, this is no joke. Everybody probably thinks this comes across very salesy. I just opened up to a random page in here, right? And I know this thing like the back of my hand because we read it. And I feel like on every page it says something that supports all of this. Even one section, I don't even know what chapter this is, the long-term cost of ignoring this, talking about defeating taxes and tax planning. And then income tax touches every part of financial life. I mean, this is like I would carry this thing around with me every day except on Sunday. Got something else with me. But this is these are great, man, and, like,
We'll
I get
call
excited about talking about these things because they're kinda funny when you know the answer, right?
we'll call defeating taxes your tax Bible. Only
There you go.
available Monday to Saturday.
Yeah.
We won't have it on the Sabbath.
It's like trying to
Um,
buy produce in town here when, I think it's the Amish that they don't sell here on Sunday, but anyways,
well, you should rest. All right, the
true.
third myth. This is a huge one. I talk about this all the time. My tax preparer already does tax planning. Remember, tax preparation is a compliance activity. A compliance activity means you're looking backwards. Tax preparation, you're looking backwards at the previous year and preparing a tax return based on those facts. Tax planning is looking forward. There are very, very different tasks. They're very complementary tasks, and they can be different people. They can be the same person. In our private CPA firm, each client, excuse me, has 2 CPAs that they work with. Their signer, we call it, or their member relations CPA, that's the person that's handling their day-to-day relationship, their tax preparation, organizing documents, leading a team to get you the best result possible, and their tax planner CPA, that's the team I'm on. That's the person that's working with them looking forward. So your tax preparer is not doing tax planning, and please don't expect them to. And we talked about this a little bit when we talked about how to pick the right tax professional. If you are meeting with a tax professional once a year, and at that point, you are either uploading a lot of documents and meeting with them virtually or handing them a lot of tax documents, that is the absolute worst time to start asking them about forward thinking planning. The hay a lot of times is in the barn. It's a great time to say, hey, let's work to get the best result possible on this tax return. And you know what? I'd like to have a conversation with you down the road a little bit and talk about 2026. So your preparer is not doing tax planning. They might give you a little bit of advice, and it's not fair to expect them to do it because they're two different tasks, yet very complementary.
And this one, Chris, I'm over here chuckling. I don't want people to think I'm just laughing at what Chris is saying, but I found this very relatable, and here's a great example, right? Like me trying to plan for something and asking my wife when we had a newborn at home. She's changing diapers, busy as heck doing 10 things. And I'm asking her about like, hey, what are we doing next weekend? Like, you'll get an answer. It's not going to be a well thought out answer. It's kind of a shoo shoo go away answer. Same thing as this, right? Talk about timing.
Absolutely. And during that tax preparation process, there's nothing wrong with asking questions about the tax return, et cetera, et cetera. But again, a lot of the hay is in the barn. And just because you're tax professional, that could be an enrolled agent or a CPA or an attorney, those are licensed tax professionals, just because they don't focus on tax planning and strategy, or maybe they don't offer that service, doesn't mean that they're doing a bad job. They're doing probably a really, really good job. So, it's just they're just different. They're different activities. One's forward looking, one's backward looking. They're both very, very important. So, Absolutely. So myth number 4 kind of ties into myth number 1, but I wanted to specifically talk about employees. Now we know the advantage of being a business owner and a rental property owner is that you pay tax on your net income, not your gross income. But the myth that employees can't do anything about taxes is the sentiment that employees can't do anything about taxes is absolutely wrong, because the sentiment is, well, I'm an employee somewhere, the taxes are magically taken out of my paycheck. I don't have, if I, back to your Sunday analogy, when I have my tax return prepared, I'm going to sprinkle some holy water on the documents and hopefully I get the best result possible. Employees absolutely can control their tax in many, many ways. A lot of times, and we talk about this all the time, just, within our Defeating Taxes, Facebook community or in other parts of this YouTube channel, the YouTube channel or podcast is that trying to take things that are typically non-deductible personal expenses and making them deductible legally and ethically. Medical expenses. So employees, hopefully, they can contribute to a health savings account. That's something. Employees can contribute to a retirement plan typically. Now, should it become should it be a pre-tax account like a traditional 401k, traditional IRA, or Roth? That's a great debate. And actually, John, that would make a really good podcast episode. We should write that down. So we're going to do that in the future, Roth versus traditional. Daycare expenses, can you put those in pre-tax? How much withholding should I have? Should I? So employees have control. They also have control, not just with their income from their employer, but they have control over deductions as well, like itemized deductions, and they can still participate in tax advantaged investments or tax mitigation strategies. They could still maybe buy rental property. It might be a short-term rental property, and they still can do tax planning and make moves. Just because the vast majority of their income comes from an employer doesn't mean they can't do tax planning.
Right. And honestly, in full transparency, I know, Chris, we're talking about this one specifically before we get to really our last myth that we'll cover in this one. I'm glad that one you mentioned in this book, especially because there's so many people that feel that way, right? Like they talk about, dreading tax time or tax season, air quotes. But when you plan, there goes season. Like there is no season anymore. It's just the way you do things. But even from, sometimes as a business owner, I look at somebody who is a W-2, so full-time employee, and sometimes they have a little bit of envy for them because there's the consistency with everything, so they can almost do a little bit job maybe of planning in some regard, but then also too, like, there's some limitations, but there's a lot of opportunity as well. So I think that's probably one of the most impactful ones that we talked about in all that content is because if you never start, you never find out if you're right or wrong, right? So if they don't
Absolutely.
try it, they just can go their whole life like that, which isn't the case.
And that's one of our teaching tax flow laws of tax planning, is that your tax return is a verb and not a noun. It's something that's living and breathing. So as an employee, every time you receive a paycheck, you're looking at that paycheck, and now more than ever, it's important because with the One Big Beautiful Bill Act, if you're getting paid overtime, if you're getting paid um, with any type of tips, those might be deductible. So there's just a lot that can be done with uh, as an employee, believe it or not. Might be a little more challenging. You got to be a little more proactive, but absolutely there are things you can do.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
So the fifth myth, that's a tongue twister, right? That we're going to talk about today, and like shameless plug, if you want to figure out what myth 6 to 10 is, you're going to have to check out Defeating Taxes. Is that
You've been doing this a long enough time, 25 something years. You can put as many shameless plugs as you want to, because it's not like you conjured this up in the shower one day, right? Like there's a lot of meat on the bones.
No, and I'm sure that there's some people driving or walking their dog but listening to this that are thought that I might be in the shower and just flew off the road in disgust. So, you know,
We're not liable for any damages. Let's put that out there.
So the fifth myth is the IRS is out to get me. The IRS is not out to get people. We focus on legally and ethically reducing the tax you pay in your lifetime. The IRS is a collection agency, right? And remember, tax laws are written to encourage and discourage certain behavior. And remember that tax agencies are our involuntary business partner. So the IRS is not out to get you. The IRS is trying to do its job, which is collect the tax it's supposed to collect based on the tax laws that are out here in the United States of America. The IRS is going to be, now, are they understaffed a little bit? Absolutely. But if you get correspondence from the IRS and you work correspond with them on your own, or I would highly recommend using a tax professional, someone that's licensed to represent you in front of the IRS. Things can get resolved quickly. John, I don't want to get too personal. I'm going to put you on the spot a little.
Please do. And I think I know where you're going with this one. And
I'm very, IRS. Yeah,
and I'm very open about this.
I know about the situation in which you were right and they were wrong. And could you, you probably felt at times they were out to get you, but you actually had someone help you out a lot through taxpayer advocacy. And we wanted to have that person on the podcast. They're just not allowed to come on, unfortunately.
100%. And yeah, I know I've peppered this in there a little bit, and I'll keep this kind of short. So, and again, I'm very open with this, right? So I know, Chris, we had mailed something in. It ended up being lost. We had documentation, things were mailed, blah, blah, blah. I think years passed where this kind of came up, snuck its head up. There was a lot of money involved there being tied up. But you're right. And then you had COVID on top of the mix, right? So there was no office to walk into. And me as the taxpayer, I literally felt like completely chained to the ground, couldn't call anybody because phone lines were blowing up, couldn't walk in, talk to anybody. And I think of all this, Chris, if I remember, I think you wrote a half-page letter to them explaining something, and I cannot speak higher about that taxpayer advocacy service. And it's not like we're going to help you out as a charity. Basically, what they did is they just took what the situation was, they communicated it, streamlined it to the IRS, and it was solved. It was solved, and they actually called me every 2 weeks and gave me an update, which I hear is not usually the case, but it was fantastic, and I absolutely would have given up if I didn't have somebody like you, so yeah, kudos to you, to write that letter and you knew what to put in it. And it was fantastic, and they appreciated it being short and not 30 pages long like I would have written.
Right, and great point as we wrap it up. Great segue that the IRS is not your enemy, and it's not your ally. It's your silent business partner. So when they ask for information, give them the information. Don't give them 10 times the information they need, and don't not give them the information. Now, obviously, when we're dealing with the IRS, we're advocating for our clients as a tax professional. However, don't think of them as your enemy or ally. They're just a silent business partner that you want to try to control the relationship with by doing tax planning and strategy.
You got it. And on that note, I know we're a couple minutes over where we planned here. But again, Chris, I think the content in that book really it's a lot of what we talk about anyways. Now it's just in written form. If anything, it's a table of contents to teaching tax flow, really, in a sense. So I know we kind of threw the idea around there. Maybe we'll do a little informal, maybe a book launch, little virtual one or something. Give some more advice on it. But again, we'll put the link in the show notes here to Amazon. Again, we make things easy. Check it out. Super, super cheap for what it is. It's not a long book. I think we're at 140 something pages in there. There's some resource links in there, etc. Check it out. And I'm honestly either get one yourself or steal somebody's that you know, and heck, draw some smiley faces on it if you want to. See if you can draw Chris on it. But even that, maybe I'm just thinking of this now off the cuff. Maybe grab a highlighter, highlight some things in it that you have questions on. Get in Defeating Taxes, our private Facebook group, defeatingtaxes.com. Drop the questions in there, and let's get it going. So really, it's taking something that if you've never done tax planning before, now you got something tangible. Throw it in your backpack, throw it in your car, take it, kind of chuck through it a little bit. A lot of good info. So again, Chris, you can do as many shameless plugs as you want. It's fun when I get to do it for you because I feel smarter. So I enjoy this. But thanks for running through these again. We're going to see everybody back here again next week, as always, on the Teaching Tax Flow podcast. Have a great week, everybody.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciuro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.